What's up everybody? Welcome to the Stocks channel. Today in the stock market we had another very bullish day, and the question is whether or not the S&P 500 is heading to a blow off top scenario. We're getting that low volume melt up and we continue to close at brand new all-time highs. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we went up about 0.73% today and we blasted right through that price target at $410. We have other price targets above that we need to start looking at because it does look like we're going up in a parabolic fashion and we could see a blow off top scenario. The next two price targets, because who knows how fast we're going to get there, are $413 and $417. Now pay attention, we still have very low volume. This is very much a low volume melt up. But if we start to see massive buying and a huge increase of volume, we could get what's called a blow off top scenario. In a blow off top, as shown by Investopedia.com, you can see that we go up in a very parabolic fashion, and then it's followed by a huge parabolic sell-off. That is why I say be cautiously bullish the higher we go, because it's very possible that we take the elevator down, and it's almost like we're taking the elevator up. Normally, the stock market takes the stairs up and the elevator down, and that's because selling comes in with huge volume. We're going up on low volume, but we're also going up in a very parabolic fashion. So be very careful when you see these charts like this, because right now you can't see the right side of this chart. You're only going to know this in hindsight after the fact. So if you're buying in right now and you're FOMOing in, just be aware of the potential downside risk. You could easily counter that with stop losses, and I'm not trying to scare you out of being a bull in a bull market. Just be aware of the potential risk. Remember, on our bear bull survey, we do have a lot of greed, and a lot of the retail sentiment is currently bullish because we're currently sitting around 57% bulls. So be very aware, the higher we go, the more risk we have to the downside. You can still see that we're in a very strong bull trend, and the price action is obviously still very strong, and we continue to close at all-time highs. Now going into next week, if we start to see a huge increase of volume and we continue to go up in this parabolic fashion, I will be getting very defensive and I will be completely out of this market until I see something happen one way or the other. It's not possible for the stock market to go up in a straight line forever. That's exactly what we've been seeing, but it's not a sustainable rally, and eventually we will see a cool off, even if it's just a sideways consolidation. You could very easily go back at a chart and look at history, but anytime we get these nice, really strong rallies, they're usually followed by selling. We get a nice, really strong rally followed by selling. Right now, we're currently in a phase where we're just rallying, and you can't see what's coming yet until after the fact, but it's very possible we get up into these levels at 417, or maybe we go higher, who knows? But it's going to eventually be followed by a huge wave of selling, and it could easily bring us down to close that gap at $400. Now, if you're not sure how to short a market, you have to be very careful, because just buying puts is not the best way to play this market. If you're not going out far enough on puts, it's very likely a lot of the premium is already baked into the price of the puts, and you still could lose a lot of money on those puts if the market decides to consolidate and go sideways. But just be aware, the higher we go, the more the risk increases, because we haven't had any significant amount of pullback or consolidation. This market has been very emotional, and it goes down way too fast and everybody gets bearish, and then it goes up way too fast and everybody gets bullish, and it just keeps repeating that cycle. You could easily look at this chart and see that we've had wild swings to the upside followed by swings to the downside, and that cycle could still be going on. You could see by the 5 EMA that we're definitely going parabolic, and we're getting pretty far extended away from that 20 simple moving average. So just be aware of the downside risk, and don't be too afraid to trade in this market. There's still a lot of stocks that have upside potential, so there's still opportunities in this market. We did break through that price target at 410 on SPY, so we could now find support at that level. The other support levels are going to be the top of the gap at 403.30 and the bottom of the gap, which is right around $400.60. The 20 simple moving average is now going to be right around $397. So we're still in a bull market, and the trend is your friend, so don't get overly bearish. If you know how to put on hedges, you can slowly start putting on hedges, but just make sure you're going out far enough, because this bull market could continue to stay irrational and we could still go into that blow off top scenario. Keep in mind, with a real blow off top scenario, we're likely going to see a huge spike in volume with the huge parabolic increase in price. So as we approach 417, if we're getting there too fast and we get there on higher volume, that's going to favor the blow off top scenario, and that's when you get the huge massive wave of selling to follow. Now, if we can get a nice pullback about 1 to 3% from here, and we get a nice consolidation here, we could correct through time, and this market could become more bullish without dropping a significant amount. So remember, we did go up very far, very fast, but it's still possible that we get one of these consolidation wedges and we correct through time instead of seeing a massive drop. So don't always assume that after a massive climb up that we need to see massive wave of selling. It is more likely you'll see the massive wave of selling in a blow off top scenario, but right now we just don't have enough volume and enough market participants for this to be a true blow off top. Now that could change, and that's why I said if we get to 417 too quickly, let's say by Monday or Tuesday of early next week, and then we see a huge increase of volume, that would then favor the huge wave of selling to follow. But right now the volume is not supporting a blow off top scenario, and there is more than likely still plenty of bears and plenty of cash on the sidelines, even though we do have a majority of the retailers that are bullish. Without a doubt, the higher the market goes, there's going to be sellers, but we're not seeing the big money sellers that really move the market. So just be aware of a possible correction through time, and this is more of a consolidation than it is a sell-off. You're going to see a sideways movement, and you're going to see higher highs and higher lows, and then we will eventually see the next leg higher in this bull market. Keep in mind that earnings seasons is coming up near the end of the month, so there's plenty of reasons for speculations in this bull market, and this bull market could easily stay irrational much longer because we don't have any significant earnings until the end of the month. All right, next up is the NASDAQ 100 Triple Qs ETF, and we see the Triple Qs going up 0.61% today and blasting to a brand new all-time high on closing prices. The previous all-time high was right around 336.50, and we closed right above 337. Remember that closes above 334 significantly reduced the probability that we were in that bearish scenario. We're now breaking out to all-time highs, and you could easily see how we could be getting up to that next price target at 341. So above 334, we're more than likely going to see one of these two price targets at 341 or 350. Remember, just like with SPY, it's possible we're due for a little bit of a cool off or a little bit of a consolidation because we did have this monster parabolic move off of the lows. Now the NASDAQ 100 has had a lot of selling because we did have that huge sector rotation where a lot of the big tech names were getting sold off. So there's still more upside in the triple Qs, and it's easily possible we see 341 next week. Keep in mind, if we do get a cool down, it's going to look something like a consolidation, and it's not necessarily going to be a huge massive wave of selling to close all these gaps. I don't want you just assuming that because these gaps are open that they have to get closed. They will most likely get closed during the next bear cycle, and we don't know exactly when that's going to be. So right now we have to remember that the trend is our friend, and we're still in a very strong bull trend. Remember that the 20 simple moving average just crossed above the 50 EMA just a few short days ago, and this trend is still picking up momentum. So we did open yet another gap today, and that gap will close right around $332.60. We still have bullish price action, but we did close above the upper Bollinger Band today. Remember, the Bollinger Bands are continuing to expand, so we can continue to ride the upper Bollinger Band and continue to go to new all-time highs. We are getting a little far extended, and the 20 simple moving average is all the way down here around 321. So you really do know your downside risk because it's defined by these gaps and it's defined by where the 20 simple moving average is. So if you're buying up at these levels, just make sure that you have tight stop losses because there could be a huge massive wave of selling if we finally do see sellers showing up into this market. But note that we have very low volume, which means we don't have any sellers. Big money controls this market, and if they're not selling, the market is going to continue to melt up on low volume. The only people that know when the big money are going to sell are the big money players themselves. We're simply the small fish, and we're just riding the wave and enjoying the benefits of being on the right side of the trade by following the trend. So don't fight this trend and realize that I do have upside price targets at 341 and 350. Because we're in a bull market with a strong bullish trend, this is a buy the dip scenario. If we do see selling and the price action can find support, we want to be buyers of the dip because this is a bull market, and in a bull market, you buy the dip until we get to price targets. So the upside price targets are still outstanding, and the longer we spend above 334, the more likely this bull market is confirmed. 334 is a very critical level, and if we start closing below 334, we're going to want to watch critical support levels. The critical support levels are right around 332, 328, and this gap closed right around 324. Below 324, it starts to look a lot more bearish, and it's not likely we're going to close below 324 in this strong bull market. Everything is subject to change, so we'll continue to watch the price action and watch the trend very closely, but right now we're still in a very strong bullish trend. On the Dow Jones, we did close at a brand new all-time high today, and we did break and close over my price target at 336. The next price target is going to be all the way up here at 347, and we could be well on our way towards that level. Remember though that when we get a breakout like this, it's always possible that it is a false breakout. So just like the blow off top scenario, if we go up too far too fast, it's more than likely that we're going to see a huge massive wave of selling. However, the Dow Jones does look like it's taking the stairs up, and we're getting a nice, more sustainable rally on the Dow Jones. So it's possible we'll continue to march up towards this 347 price target, but also keep in mind if we break back down below the all-time high level at 336, that could mean that we already saw the top and we're due for some selling. So on the Dow, we do have bullish price action, and we're still maintaining a very strong bull trend. The downside support levels I want you to pay attention to are going to be 336, 335, and right around the 20 simple moving average in the gap close around 331. Remember, in a strong bull market, it's a buy the dip market until one of these support levels fail and we see a critical breakdown in the price action. When the trend and the price action are bullish, we want to continue to favor the fact that we could see these upside price targets met. On the Russell 2000, we were flat on the day, and we still see the Russell going in through a consolidation. Remember that the Russell was way too far extended on monthly charts, so it's really just consolidating those gains, and we're seeing people selling the small caps and rotating into the large caps. So we see the Russell 2000 underperforming the Nasdaq 100, and that really isn't any surprise because we've already predicted that move in the market. When we do the Sunday video, we looked at the Russell 2000 and we showed how extended it was on monthly charts, and it's so far extended, it's going to take at least a month to continue to cool off. So I'm looking for the Russell to trade within this range between $227 and right around $210. If we do get a breakout above this resistance trend line and we could break resistance at 227, then it increases the probability we're going to see all-time highs. But right now on the Russell 2000, continue to watch this 20 simple moving average, because if we're below the 20 simple, it increases the probability we could go into a bear market. If we break below the 50 EMA around 219, that'll be the confirmation that the Russell 2000 is going bearish. You're then going to look for support at 210 and 205. Upside resistance is right around 223, the resistance trend line at 224, and our 227 and 233 resistance levels. On Arkk, we dropped 0.71% today, and that's actually very disappointing with how bullish the rest of the stock market is going. The Arkk ETFs continue to underperform, and this goes to show how critical it is that we're below the 50 EMA. Remember that I said the Arkk ETFs are not bullish until we can get closes back above the 50 EMA, and we have yet to do that. So your money is much better off being where the bull market is, and that's really in the triple Qs and the SPY. The Arkk ETFs are very strongly underperforming the market, and there's really nothing on this chart that screams it's a buy. Yes, we are holding above the 20 simple moving average, but we're failing to close above the 50 EMA. So we still need to see closes back over 126, and if we start closing back below 121, that increases the probabilities we're going back into a bear market, and we're likely going to close the gap at 115. There's also support at the support trend line right around 111. On the VIX, which is our fear indicator, we see the VIX continuing to fall, and we see the VIX now trading at 16.7. Remember, I've been saying this for a while now, but the lower the VIX goes, the more likely we're going to continue to see all-time highs. We're not expecting to see a huge wave of selling or a correction until we see a spike in the VIX. So with the VIX trading below 18.2, that increases the probabilities that we're going to stay in a very strong bull market. If the VIX starts spiking into the 20s, that's going to increase the probability of a stock market correction and a huge wave of selling. So right now the VIX continues to predict all-time highs, and we just want to continue to watch it. If it continues to head lower, we're going to remain bullish. On gold, we're finding resistance right at that 50 EMA, right around 1760. We still need to break above that level, and we could see some more price targets above at 1776 and 1826. Downside support is the 20 simple moving average right around 1731. On silver, we're still slowly but surely working our way up towards resistance at the 50 EMA, which is at 2566. If we can break back above the 50 EMA, the next price target is right around 2656. Downside support is going to be right around $25. On Bitcoin, we continue to see it struggling to break back above this $59,000 level. Remember that if Bitcoin is going to all-time highs, it needs a decisive break and close on a daily chart above 59,000. You could see it's in a nice consolidation wedge, and when you're in a wedge like this, it could break to either direction. So we don't want to take any sides, we just want to let the price action confirm, but do keep in mind that Bitcoin is overextended on a monthly chart, which does favor the probability that it's going to trade sideways or down. If it does break out to the upside, the price targets are at 62,500 and 64,000. If it breaks down below 55,000, we're then looking for a possible break of the 50 EMA, which is now right around 53,500. Below the 50 EMA, it's a full bear market, and we're going to see a massive correction in Bitcoin. Above 59,000, there is a little bit more upside, but it only increases the probability that we'll see a correction next month. On Amazon, we continue to see huge bullish follow through, going up 2.21% today and getting very close to the next price target, which is our resistance trend line right around 33.80. Remember that we broke and closed over that price target at 32.97, and that level is now acting as support as we continue this climb. We did see a huge increase of volume today, so there's definitely buyers stepping in and getting behind this rally. This is a very impulsive rally, and I don't want you to view this as bearish in Amazon. If you zoom out on Amazon, it's been in a huge sideways consolidation, and this is really no shock that something that's been consolidating for that long can have this much of an explosive move. So if Amazon does break out of this resistance trend line, it's very possible it's going to new all-time highs and it's going on a monster bull run. However, if this resistance trend line can keep the price lower, we're more than likely going to cool off and retest some of these support levels that we blasted right through. So watch Amazon very closely, because if it does break out, we're looking for price targets above 3,400 and beyond. If we stay within resistance trend line, we're looking for support at 32.97 and 32.22. On Tesla, we continue to see weakness, with Tesla going down about 1% today and still failing to break above the 50 EMA. Remember that Tesla is not in a bull market yet, because we still need to see a close over 718. We need to get price action closes over the 50 EMA as well, which is right around 689. Downside support is going to be right around the 20 simple moving average at 665, and if that breaks down, we're looking at 618 and 550. Remember that we don't have a decisive bull trend on Tesla, and it's favoring the bear market still because it's not joining the tech rally, and Tesla is in the triple Qs. So with the triple Qs going to new all-time highs and Tesla not joining in on the rally does tell us that there's something wrong with this stock underneath the hood, and if it's not joining in on a bull rally, it's more than likely going to continue to show weakness. Eventually, if we can get the price action to show it's going bullish, we'll switch stances on this, but right now the chart is showing that there's no reason to be a Tesla bull. On Apple stock, we had a huge bullish day today, going up over 2% and blasting through that price target right around 132. That did close the gap that we had open from back in February, and it means we're more than likely going up to the next price target at 134. Remember that Apple does have a gap below, which is right around 128. So downside support levels are going to be 132, 130, and the gap close at 128. Upside resistance is going to be 134 and the previous daily high, which is up here at 137. Remember that Apple is a lot like Amazon, and it really hasn't gone anywhere lately, and it could be trying to break out and go to all-time highs before earnings. It is equally possible we see the end of this rally soon and we come down to close this gap at 128. So continue to be defensive, and if you're trading Apple long, make sure you know where your risk levels are and set tight stop losses. On the financial sector, we went up 0.86% today, still closing over the 5 EMA and still maintaining a bullish trend. On the industrials, we had a very bullish day today, going up 0.97%, closing above the 5 EMA and still maintaining this very strong bull trend. On the energy sector, we're getting very close to retesting the 50 EMA as support. We're going to see if the energy sector can try to bounce off that level and try to go back into a bull market, or if it's going to start breaking down and going into a bear market. On the healthcare sector, we had a very bullish day today, going up 1.1%. and closing well above the 5 EMA and still holding on to a strong bull trend. So going back to the S&P 500, you can still see why this market continues to go to all-time highs. We still have bullish sectors across the board except for the energy sector, and we continue to see the VIX going lower, which means fear has absolutely left the building and we have no more fear in the stock market. That's subject to change, and obviously we could easily see a huge wave of sellers coming in at any time, and it's all in the hands of the big money. If they decide to sell, the market's going lower. If they decide to not sell, the market's going to continue to drift up on low volume. Eventually, we could see that blow off top scenario. So if we get to that 417 level way too fast on a huge spike in volume, please remember to get defensive and don't FOMO in. I said this back when we were in the chop zone on the triple Qs. If you're not willing to buy at these levels, don't FOMO in later at all-time highs. It feels very good to chase rallies like this because everybody's making money, but you're going to end up buying in at the worst possible time, and you're going to catch the top perfectly right before a huge massive wave of selling. So please heed my warning on that, and if you are buying into this market, just control your risk very tightly. Set those stop losses and know exactly what your exit strategy is if the market turns against you. Remember, on the Stocks Channel Discord, I'm giving intraday updates on the stock market and bringing new trade ideas to you weekly. If you're interested in the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of the video. So next up, let's take a quick look at our trade idea, which is Shopify, and we see Shop going up 0.38% today. We did blast through that price target at 1200 yesterday, and we did again hold up above that level today. We saw some selling intraday, but we saw buyers stepping in, and we did close at another daily high. We're holding up against the upper Bollinger Band, and we are slowly but surely building up a bullish trend. So we're looking for Shopify to hit the next price target at $12.60, and a break and close over that means we're heading up to the next price target at $13.16. We do have a gap to fill still all the way up here at $13.60, so there's still a lot of upside left in this stock. We did see some nice volume coming in on these recent moves, and the buyers are definitely stepping in as the stock price goes higher. So Shopify is still looking really good, and if you're trying to get into this trade, you now want to look to buy off previous resistance levels. So the new buy targets are right around $1,200 and the 50 EMA, which is right around $11.74. So Shopify is still looking really good, and if we go back into a bull market, we could see a lot higher prices. So thanks for watching, everybody. Happy Friday, stay safe out there, and as always, I will see you in the next episode.